Welcome back to CEO Money. I'm Michael Yorba, your host. Thanks for joining us today. All right, my guest next is Glen Bierman, CEO, Tycon Partners. Glen, welcome back to the show. Thanks for being here.
Thanks for having me.
All right, my pleasure. We'll have to back up just a little bit, give you a chance to tell the audience, who, if they haven't heard about you, your background, and then what Tycon Partners does, and then I have a whole list of questions I want to walk through with you.
Thank you, Michael. So my background is investment banking for about 25 years, former CEO of public and private clients. So I've had the opportunity to get the view from both sides of the table. And so when the Jobs Act was being enacted and they were talking about Regulation A+, I got very interested and decided that I wanted to pursue a new business specializing in Reg A+. And so I partnered with Natalie DeMarco, our president, and we're both focused on providing a turnkey Reg A+ offering to our clients.
Well, tell the listening audience, what is Reg A+?
So Reg A+ is Title IV of the Jobs Act, and for the first time, it allows a company to go directly to the public and raise up to $50 million. And that includes non-accredited investors, which represent 98% of all investors, and all investors combined have household investable assets exceeding $42 trillion.
Tell me about Tycon Partners, where you fit in with this Reg A+ picture.
So Tycon Partners partnered with the New York Stock Exchange to list our clients on the New York Stock Exchange, which was formerly the New York Stock Exchange Market, which has been renamed to New York Stock Exchange American. And the reason for that partnership is we believe in creating real public companies that trade like real public companies. And to that end, we partnered with the NYSE to list our clients after their Regulation A offering. They list on the NYSE American.
Okay, so for those who haven't figured this out, the difference between an IPO and a DPO, meaning a direct public offering, open that up.
All right, so the term DPO implies that a company goes directly to their own public offering. So we refer to that as a DPO. But in essence, it's an IPO, with the difference being the company is going to the public direct to bring in investors, whereas in an IPO, you typically have an investment bank placement agent going to the general public, or not the general public, but to the accredited public to raise money in a fixed audience in traditional IPOs. The big difference in the traditional IPO is those shares were only offered to clients of those firms that were conducting the offering. Whereas in Reg A+, the offering's open to everyone in the general public.
Now, I can see that this can open up a massive boom for people in your industry sector who are really at the forefront of putting this through. You often say that with this model, let's a company sell, but the product that they sell right alongside the product of their stock. What does that mean for companies using Reg A+?
So in traditional IPOs or even fundings in my investment banking career, I used to tell my clients that you have two products, the product or service that the company sells and the product of stock. And we used to make a separate marketing presentation for the product of stock because it's different when you sell product. And so when Reg A+ came along, you're actually, the audience you're selling or asking to invest is also the audience that would be interested in purchasing the product or service that you offer. So what's been seen in Reg A+, all the marketing efforts in your Reg A+ offering not only brings in investors, but a dramatic increase in sales.
I can see that would apply because that's pretty much our philosophy, our principle with our company. Non-accredited investors, there's a lot of them out there. You mentioned this earlier, but I'm going to come back to that if we can. How many of them, and really how much capital, and how do you access this? How do you access those people to give them the opportunity for a Reg A+ on the types of companies that come through Tycon Partners?
There's a couple of parts to your question. Reg A+ comes in two tiers, Tier 1 and Tier 2. Tier 1 is up to $20 million and Tier 2 is up to $50 million. Tier 1 is a path to listing on the pink sheets, and Tier 2 is a listing on more of a bigger exchange. As Tycon partners, we only do Tier 2 offerings because Tier 2 requires an audit and Tier 1 does not require an audit. And we believe in having our clients audited to present them to the general public.
Tell me about investor portals, how you interface with this process. There's so many of them out there, and some are better than others.
So philosophically, we do not believe in investment portals, and there's two major reasons for that. The first issue with investment portals is you're going out to the general public to tell them about this great, unique investment opportunity, and then you take them to an investment portal that has a page or several pages of these unique investment opportunities. We use the analogy, it's like taking a kid to the candy store and asking them to pick their favorite candy. And you know what happens is they start looking at other candies just like investors will. Investors are myopic. They'll start looking at other offerings, and by the time they're reading the second or third, they end up investing in none. So we don't believe in investment portals for that reason.
I understand that. That makes perfect sense. What about Tycon's road to the New York Stock Exchange? Why is that important?
Well, you could use Reg A Plus to list on the over-the-counter market, which has traditionally been referred to as the penny stock market. And there are several companies that have pursued that road. We chose the NYSE for some major reasons. And the major reasons include, first, that the volatility on the New York Stock Exchange is lower than NASDAQ or the OTC market. And so by New York Stock Exchange rules, the market maker, they call it the designated market maker, has to keep the volatility out of the trading of the market for your stock. Whereas in NASDAQ, you see a lot of swings. Case in point, this past July, 3 companies listed, 2 on NASDAQ and 1 on NYSE. The one on the NYSE had a tenth of the amount of shares of one of the ones that listed on NASDAQ, and it had 10 times the amount of volume and a lot less liquidity than the comparison on NASDAQ.
That makes sense to me. You put a lot of focus on marketing. Open that up for us.
So marketing is the key to a good Reg A Plus offering. It's interesting. We've learned through WPP, the world's largest ad agency, that they did a study on how long it takes a buyer to make a buying decision in today's markets. And what was discovered is buyers are making a buying decision in the first 8 seconds. Typically, non-accrediteds don't understand valuation or financials or read the prospectus. They make an impulse buy, and what we've learned is the first 8 seconds. And so it's very important when you're marketing to make sure you're capturing them early, because once you've captured them, then hopefully you can turn them into an investor.
That makes sense to me again. All right, at Tycon, you're helping companies successfully use Reg A+. What are some of the pitfalls you see other companies facing with Reg A+?
Well, what we've seen is, number one, we've seen companies list on portals, and they've been very ineffective. What we've seen in a lot of companies is they keep following amendments to extend their offering because they're just not bringing in the funding. Another issue that we've seen is companies have utilized the testing the waters provision in Reg A+, which allows you to go out to the market and gauge the amount of interest. And there's 2 reasons we don't like testing the waters. First being, if you're going to ask an investor if they're interested in investing, we believe you should be ready to take their check, not tell them, well, we'll get back to you. The second issue is some of the states are contesting testing the waters because in Tier 1, you're required to file state blue sky filings, and in Tier 2, you're exempt from filing state blue sky filings. If you're doing a testing the waters, the states are contending, we don't know if you're Tier 1 or Tier 2, and we want you to register blue sky in our state, and 2 of the states have taken issuers to court over this. So that's why we don't recommend it.
Got it. All right. Glenn, we're out of time now, but before we go, you do a great service. You sent us some marvelous companies that we're going to put on the show. Hope you continue to do that. When please extend to Nicole, I'd like to have her on the show with me and you to come back again. Is that okay?
Appreciate that.
All right, my pleasure. Contact information for Natalie DeMarco.
Natalie.
When we sign off now, please contact information for you and your company.
TyconPartners.com, and you can call us at 305-998-7090.
Perfect. Thanks so much for being on the show, Glenn. It's happy to have you here.
Thanks for having us.
You're welcome. Glen Bierman, CEO, Tycon Partners, TyconPartners.com. All right, thanks for listening. CEO Money. We'll talk to you soon.
Thank you for listening to CEO Money. If you would like to be a guest on our show or know someone who should be on our show, please contact us at info@wfn1.com or our website, wfn1.com. If you would like to reach any of our guests, please visit us at wfn1.com. Join us on Twitter at WFN Live or our Facebook page at WFN Live. We will be back tomorrow with more great interviews and ahead-of-the-curve information you just can't get anywhere else.
CEO Money is sponsored by WF News 1 Incorporated. Views and opinions heard on CEO Money are not necessarily the opinion of this station or its management. Material on this program is intended for general information only and should not be taken as specific investment, tax, or legal advice.